Hi Tapan, what are your views, especially in the first two companies I would like to point out, the first one being Vandana Foods and Marc Loire Fashions. Is it an avoid or a cautious?
Yeah, thanks, Sharad. Let us take Vandan Foods first. Vandan Foods, actually this business is quite fragile. No, overall there is no moat as such. No, at the end of the day, you see their main raw material is castrol seeds. Now, any change in castrol seeds pricing will impact their margin. Again, they are concentrated on Gujarat only. Geographical, they are not widespread. As you told, there are pending legal proceedings involved with the promoters. So anything, no, materializing that will impact the margins also. They have leased office premises. So any termination on the office part, they have to relocate and all that. Again, quality issues are there. No, lot many products they have to recall. That has been seen in last few years. So when I see the valuation, no, it is trading at 25 P, which is already on a higher side for this type of segment. So I think Vedant is an avoid from my side. Let me take Marc Loire Fashions. Now again, the if you see the last 3 years sales growth, no, it's almost 6% only, which is quite low for the retail company. Again, they have a outsourcing manufacturing, so any type of no change in vendor will impact them. They have a tough competitions against Metro, Bata, Relaxo. Also, they have to maintain almost 800 plus design inventory. So you can imagine, such a big inventory they have to keep it. Pending tax litigation is there. Again, they are expanding to 15 stores. So execution risk is there if something goes wrong on that part. Also, overall, their products is been lot many time in publicly also told that there is a quality issue. So looking at that and seeing the valuation, Marc Loire Fashion is also avoid from my side.
Yes, both avoid calls coming in for Tapan. And also Tapan, two textile names are also there, Cedaar Textiles and Silky Overseas, and also a jewelry name coming from Eastern India. Smaller issues and of course concerns are large, especially on the textile players. So what are your views on Cedaar Textiles, Pushpa Jewelers, and also lastly Silky Overseas?
Yeah, talking about Cedaar Textile, no, the revenue is always volatile, quite volatile. But the main problem is that no, they have a higher debt to equity ratio, almost 5.8 times, which is quite high. So they have a good amount of no interest cost, which is eating their margins. Customer concentration is there, and there is no long-term contracts that will also impact the future order book and all that. Again, they have lot of part cost and also supply issue. Okay, so we have seen even the labor also they are facing issue. They have a single manufacturing location risk and high dependence on Bangladesh export. As we know, our relationship with Bangladesh is not so great. So anything of impact that will impact their profitability. Again, logistics and distribution challenges are there. So looking at that, again, the textile business is not so great business. I think this is an award from my side, Cedaar Textile Limited. Let me talk about Pushpa Jewelers. Pushpa Jewelers is much more depending on the gold prices, volatility. So you know that if the gold price goes and up down, their margin will also go up and down. Again, they have to keep lot of working capital because of this. If you see the IPO size is little bit on a higher side, so there will be a supply overhang issue. Again, they don't have their own brand, so pricing power is quite less. Only few customer concentration is there. Also, if you see the export market is not consistent, no, there is lot of volatility. Lot of competition is there in the same segment. And looking at the valuation, for me, Pushpa Jewelers is also an avoid. Let me take the last one, Silky Overseas Limited. Now here, if you see, their main product is blanket. 65% of the revenue coming from blanket only. Trademark not registered. Again, they also have a single manufacturing risk. There are a lot many challenges coming, but they have a lot of competition also. If you talk about competition, there is Trident, Indocount, Welpson. So they are big competitors. Again, export segment is also getting impacted due to the currency fluctuation, which is impacting the margin. Again, they don't have as I told you, the brand is not so great. So no lot of no sales has been missed because the brand is not so great. So that is also an issue. They have a good labor size. Okay, so any type of no problem there, that will also impact their operations also. So looking at all this and also the valuation, for me, Silky Overseas Limited is also an avoid.